The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon. Thank you for joining us and welcome to this Make UK webinar in partnership with Squires Patent Box. This afternoon we will be looking at the changes to the IR35 rules and their implications. I'm Jenny and I'll be your moderator for the day. There's just a couple of points to get through before we start. Firstly, we are recording the webinar and we will be sending a link directly to you via email in the next day or so. During the session, we have some polling questions we'd really value getting your input on. When you see the voting questions on your screen, you simply select and submit your answer. We also have some time allocated at the end for questions. Please do submit any questions you have using the chat box. You can do that at any point during the webinar and we will pick them up at the end. Now, I'm delighted to introduce our speakers. We have Patrick Ford, a tax partner at Squire Patent Box. His expertise includes advising on all tax matters relating to employees, with a particular focus on issues relating to contractors and IR35. He is described in Chambers UK as absolutely preeminent in the market and is recommended as a leading individual in the legal 500 UK for corporate tax. We also have Tim Thomas with us today. Tim is a qualified solicitor and Make UK's Director of Employment and Skills Policy. Tim engages with government and parliament on all areas of employment and skills policy in the UK and the EU. His legal expertise has positioned him as the go-to person for UK and EU Parliament, and he's regularly called upon to address and advise MPs, MEPs and peers. He also sits on a series of exclusive and influential government advisory groups. I'm pleased now to hand over to Patrick to start the session.
Thank you very much, Jenny. Hello everyone. I'm going to talk about the background to IR35 and how it works, the changes that we've had in the public sector since 2017, which have trailed the private sector changes, just in terms of what lessons we can learn from them, the latest position in respect of what we can expect in the private sector with IR35, and then some practical steps that you can be taking to prepare for the changes when they come in next year. So starting with the background to the IR35 changes, the technical name for IR35 is the Off-Payroll Working Rules, but everyone just calls it IR35. We've had it since 2000. It relates to what are referred to as personal service companies or PSCs. So that's essentially where a worker sets up their own company. So it's a one-man company, the worker's a shareholder. And so rather than the individual contracting with a client or an agency to provide services, it's actually their PSC that contracts to provide those services. And there are plenty of legitimate tax reasons for setting up PSCs. But the reason the revenue don't like is where they're set up just to avoid PAYE and national insurance. So in circumstances where if the individual had contracted rather than contracting through their PSC, then they would have been taxed as an employee and paid PAYE and NI. So the aim of IR35 was to tax all workers in the same way for employment tax purposes, whether they were using a PSC or not. Under the current rules in the private sector, it's the individual PSCs that are responsible for determining whether IR35 applies. So end user clients haven't actually until now had to think about it very much. The test, as I've said, is if the individual had contracted directly, would they have been taxed as an employee? And if the answer is yes, under the current rules, the PSC must then account for PAYE and national insurance. And this is a good position for end user clients and employment businesses as the rules currently stand, because they don't actually carry the risk of non-compliance. But that is what the revenue are looking to change with the new changes, as we'll come on to. And at that stage, I'll hand over to Jenny for our first polling question.
Thanks, Patrick. Yes, for our first poll, we would like to know, do you know which individuals working within your organisation are using personal service companies? Yes, we have this information. No, we have not gathered this information, or not sure. Just give a couple more moments to give people time to submit their answers. Okay, that's great. Thank you very much. So, Patrick.
Okay,
Quite an interesting split. We've got 50%, so half of the people with us have this information, and 28% are not sure, and then the remaining 22% have not got this information. Is that the kind of split you'd expect?
if anything, Jenny, it's actually slightly better than generally the answers we see to that question. We've obviously got quite a long lead-in time, but still, I think end user clients should be preparing for this, and a lot of them are at the very early stage and haven't really thought about it too much. So I think that's not a bad split, but obviously those who haven't got the information yet or are not sure, the sooner they get onto that, the better. So just going on to when IR35 applies, so just the basics of the conditions for IR35. So firstly, the individual provides services via a PSC. They're under an obligation to personally perform the services. The contract, as I said, is not directly between the individual and the client. There's a PSC in the middle that contracts. And then probably the most important point, the key test, the circumstances are such that if the individual had contracted directly rather than through their PSC, they would have been an employee for tax purposes, in which case IR35 applies. So the key question is, are they working like an employee, regardless of who has actually contracted with the client? And so moving on to the next slide and looking at that test in a bit more detail, the test is based on a number of factors to decide whether the individual is working like an employee. No single factor is determinative, which is what makes the test particularly difficult. It's not a checkbox exercise where you can just tick a few ticks or crosses and say, yes, that's fine. You have to consider the factors. Some have more importance than others, and you have to weigh them up. And the documentation is important. So what the contract says is important, but actually what happens in practice is key. So just because the contract says something, if that's not actually what happens in practice, the latter will overrule. And just set out there on the slide some of the key points that are relevant to the test. So for example, personal service substitution. Is the individual entitled to provide a substitute? In reality, are they actually likely to do so? Supervision, directional control is a key one. Who decides how the work is done, where it's done, when it's done? How much autonomy does the individual have over how they decide that? Because the more autonomy, the more likely they are to be consultant type rather than employee type and outside IR35. Mutuality of obligation. So does the client have to provide work to the individual? Does the individual have to do it if they're offered the work? That would be a badge of an employee typically. Does the individual take financial risk? How integrated into the business are they? So how long have they been working for you? Do they come to staff parties and so on? Do they provide their own equipment, or do you provide them with a laptop, mobile, a vehicle if they need a vehicle, and so on? All those kind of factors are relevant to deciding whether IR35 applies. The revenue have an online tool to help decide, and the revenue place a lot of importance on their online tool. It's known as CEST, C-E-S-T, and if you Google it, you'll find it very quickly. There's about 16 questions. You can enter them in. You can actually do it anonymously, so you can play around with it a bit to get an idea of whether you think you're likely to have individuals inside or outside IR35. And the revenue say you can rely on it if you put the answers in correctly. So you can complete the tool based on a particular individual, print it off. It says outside IR35, self-employed type, and then you've got the determination and you've got the backup for that. But the tool isn't perfect, and there are some issues with it which are commonly raised. One is the accuracy of the tool. So it's, as I said, it's a very complicated test. It's based on case law, and so is often changing. And so it's quite difficult for the revenue to boil that down into the answers to 16 questions. It's good that they've tried, but it's not necessarily always giving the right answer. And there's certainly concern that it's also biased towards employment. There are approximately 15% of cases the revenue think where it doesn't actually give an answer because it decides it's too difficult and the tool's not suitable to decide those cases. But those cases are likely to be the borderline ones where people are most in need of the tool. So it's definitely not perfect, but it is a starting point. I think also the point that you can rely on it if the answers are correct, you need to just be a bit wary because some of the questions need a bit of expertise to know how to answer them. And it's quite difficult also to answer some questions yes or no. So do you exercise supervision, direction or control over the individual? Well, a question like that is often not a simple yes or no answer. It's somewhere in the middle. And also, are you able to get hold of all of the information you need to answer the questions correctly? And then a third and final thing just to bear in mind with the tool, it's only ever a snapshot in time. So if circumstances change, and we all know with engagements like this, they can change over time, the revenue could come and say, well, yes, you were right when you entered the information in the tool and it gave you an outside IR35 answer. But 6 months later, when we're looking at it, actually things are being done differently with the individual, and we think it's actually an inside IR35 answer. So that's a bit about the test and how IR35 works. So why do the government want to change it? So as I said, at the moment in the private sector, it's the PSC that has to decide this test, is the individual working like an employee, and the PSC that has the liability for PAYE/NI if the answer is yes. The main reason the government wants to change it is because they just feel that PSCs aren't complying. That might be down in some cases to ignorance of the law. Probably more often, it's confidence from PSCs that they're very unlikely to be challenged. They would be quite unlucky to be challenged because there's obviously a lot of them. It's very difficult for the revenue to go after these companies individually. Even if the revenue go after them and win, the companies often don't have any assets because they're just one-man companies and they wind themselves up. So it's a huge amount of resource for the revenue to ensure compliance under the current rules, and the revenue just don't have that resource. And as you'll see on the next slide, a couple of the other points made by the revenue in terms of the increasing cost and the labour intensivity. So what the revenue did is in 2017, or the government did, is change the rules for the public sector. And it was quite clear that this was trailing similar changes for the private sector, but there was a lot of lobbying against that. So I think the government felt it was easier to do it in the public sector and then say it's working, we'll now do it in the private sector. So in the public sector, it's now the end user client that's responsible for determining whether individuals would have been employees for tax purposes if they were engaged directly. So basically doing the IR35 determination. And the reason for that is referring really to what was just said in the previous slide. The revenue feel they're more likely to comply. So they feel they might be better placed to have the information to know how the individual's working to apply the test. They're likely to be more cautious, or put it this way, more concerned with compliance. And they'll definitely be easier to challenge for the revenue because a single end user client might have 20, 100 individuals who are affected. So rather than the revenue needing to go after 20 or 100 different PSCs, they can come after one end user client in respect of all of them. And then that end user client is likely to have bigger pockets if tax is due than a one-man company. So that's clear reasons for the revenue wanting to do this. And that's how it's been working in the public sector since April. If IR35 applies, and so under the end user's assessment, they decide the individual would have been an employee if they contracted directly, whoever pays the PSC is liable to pay the PAYE and national insurance. Now, in many cases, that might be the end user client, because the end user client has contracted with the PSC. But in some cases, as we'll come on to, you'll get a chain where, for example, the end user client has contracted with an agency, and then the agency's contracted with the PSC, or you might have other intermediaries in a longer chain. And so in that case, it's whoever pays the PSC who has to account for PAYE and NI, which is a bit of a disconnect. The revenue would like to have it that the end user client is just responsible for everything. But where you do have that chain, the end user client might not necessarily know what the PSC is being paid, and so how much to deduct PAYE and NI on. So it doesn't work in those situations with a chain to have the PSC accounting for the PAYE and NI. It needs to be whoever's paying the PSC. And so under the current public sector rules, the public sector end user client has to provide their IR35 assessment and has to provide answers to queries on their assessment within a certain period and take reasonable care in that assessment. So in terms of those changes, the revenue put a very positive spin on them. I won't go into detail about that. There's a lot of people who would disagree with that positive spin, but the revenue feel they have been successful and they've certainly raised more money. I think a key point was that the public sector weren't given enough time to put in place the changes, which is one of the reasons why we've had quite a long lead-in time this time around. In terms of issues with the public sector reforms that are commonly raised, to give us an idea of what issues we might have with the private sector changes, probably the most common is that the end user clients are providing blanket approaches. So they're almost becoming overcautious and deciding that every worker in a certain department of a certain type is within IR35 and working like an employee just because they don't want the risk of getting it wrong. Or perhaps they don't have the resource to look at 20 different individuals separately, and so just decide all 20 who are working in that department, they'll decide are within IR35. There's definitely been an increased admin burden for end user clients, as we'll come on to. There are the potential higher costs where IR35 applies, because there's extra employers' national insurance payable, and someone is going to have to bear that in the chain. And there's also been a suggestion of aggressive tax avoidance schemes to try to get around IR35, which generally don't work, but can create an uneven market, because those that are using them until they get caught by the revenue have an unfair advantage. So what's the latest position? So last autumn, we had confirmation that the public sector reforms will be extended to the private sector, and we had our implementation date of 6th of April 2020. And just the point to note on that is that it will apply to pre-existing contracts. So it won't just be new contracts after 6th of April 2020. From 6th of April 2020, the rules will apply to any ongoing engagements. Going on to the next slide, the changes will not apply where the end user client is a small business. So there is an exemption for small businesses, and the likely test of a small business is set out on that slide. The revenue have said they're going to work to improve their online tool. And then the latest was that we had a consultation in March. But before we go on to that, we've got our second polling question.
Thanks, Patrick. Yes, we do indeed. So for our next poll, we would like to know before this webinar whether you were already aware of the proposed changes. So yes, you were, or no, only aware due to the webinar. Again, just a couple of moments to give people a chance to submit their answer. That's great. Thank you very much. So we're looking at most people, so 63% of those on the webinar this afternoon were indeed aware, and 38% were not aware. Tim, as through your engagements with Make UK members and the wider community, is that the kind of result you'd expect?
I think that's a little more than we'd expect. Lots of Make UK members think I'm just catching up with what Patrick has just briefed us on, but I think it's got quite a deep penetration in our sector, and I think there are many members out there that have not yet caught up with this change. I think a lot of people dialing in today will be slightly alarmed at what you said, Patrick, that this will apply to pre-existing contracts. So it may well be we've got members that are just catching up with this news, looking forward to the changes next April. Is there some possibility that essentially this change is going to be backdated? So if you've got a contractor that's been with you for a couple of years and this change comes in next April, that you're going to have to look to see how you treated them in the years before next April, and essentially there's the liability for this could stretch back in time. Is that a possibility, Patrick?
Thanks, Tim. For the end user clients, there isn't a risk under IR35 of being liable for historic liabilities. It's very clear that up until 6th of April, the risk of IR35 in the private sector is on the PSC. Post-April, the risk is on the end user client and the person paying the PSC. And that's a clear distinction. What may come up is that individuals who have been treating themselves as outside IR35 are then treated as inside IR35 from April, because the end user client does the determination and takes a different view to the view the individual and their PSC took. And then the individual will be concerned, thinking, well, nothing's changed. So that basically means I've been getting it wrong for the past 5 years. What the revenue have said, both in the budget and actually in discussions we've been involved in with them, is that they intend this to be forward-looking. They don't intend to raise historic inquiries into the position of these individuals and PSCs. Now, that isn't anything which is likely to go into legislation. So to an extent, we're trusting the revenue with that. But the revenue have been very clear that they just want people to be getting it right going forward, and they aren't looking to try to get lots of back taxes. So we'd hope to take them at their word on that.
Thanks, Patrick. And one more point. You said this is a consultation extending to the private sector. Does this mean to say it might not happen, or effectively is this a consultation saying it's going to happen, we're just consulting on how we're going to do it?
Definitely the latter. This is definitely going to happen. We had initial consultation on is it going to happen last year. The answer, which we all anticipated, was very much yes. And this consultation is very much around the details of quite how it will work.
Thank you.
So moving on to the March consultation. So a couple of points which were raised in it. Perhaps the most controversial is the suggestion that if there is a chain, so when we were talking about having the client and then one or more agencies between the client and the PSC, if whoever pays the PSC doesn't account for the PAYE and national insurance that's due, if IR35 applies, then the liability can potentially move back up the chain up to the client. So in theory, the client could do everything right. They could decide it's inside IR35, they make the determination correctly, they pass it on correctly. An agency, for example, goes bust down the chain, and so the tax doesn't get paid. The revenue can come back up the chain after the client, even though it's done nothing wrong. And the revenue's view on that is to say it's up to the client to be aware of their contractual chain and be happy that their agencies and anyone else in the chain is compliant and effectively unlikely to go bust, which you can't completely be aware of, obviously, and getting contractual indemnity protection isn't much use if an agency's gone bust. So that is quite controversial, and we'll have to see what the revenue say about that once the consultation has closed. Another point which is raised in the consultation is that actually the end user may be liable for an incorrect determination if they get it wrong and say it's outside IR35, even if they took reasonable care, which would be different to the current public sector rules where taking reasonable care is an excuse. And there's also a suggestion that end user clients might need to provide a process for disputes where the individual is happy with an inside IR35 determination. So we've got responses to the consultation have to be in by next week. We then expect the revenue's view on that consultation and then draft legislation to be provided in the summer. We've just taken the next two slides, just taken a couple of rather scary looking diagrams from the consultation document. This just gives you an idea of the longer contractual chains that you might see. And so this first one is the revenue saying that they're suggesting the status determination is applied down the chain and each party is responsible for providing it on to the next party, and perhaps also the client providing it directly to the worker. And they're just looking to try to avoid disputes about the IR35 determination and make sure everyone's got the right information. Tim, I think you had a quick question to ask.
My question is, so our member will be the client, they've got the worker there. If you've got a number of different intermediaries between the client and the worker, where does the client, the Make UK member, get the information in order to make the assessment? Because they might be dealing with the agency, but they might not know even the identity of the other organisations in the chain between them and the worker.
Yeah, it's a very good question, and it's raised quite a lot. I think the short answer is the revenue don't have much sympathy for that argument. So there's been quite a lot of lobbying for the online tool I mentioned earlier to actually be a multi-party tool where the different parties in a chain have to enter into it and have joint responsibility. The revenue are quite anti that, and I'd be surprised if we get that, because they want to be able to put responsibility all on one person, and the end client is the person they really want the responsibility on. And so their view is the end client needs to become aware of their chain, and so it's not an excuse that they won't necessarily know who's further down the chain. And that goes back to the liability point, which actually, if we move on to the next slide, is covered in that. This idea that if a party up the chain defaults and gets something wrong, the risk comes back up the chain and comes to the client. And so the client is effectively given responsibility for making sure the others in the chain comply. And the revenue's view is that will make clients be more sure of who they are choosing to be involved with in the chains. Whether that's realistic or not is a different thing, and it could prejudice, for example, smaller agencies, because no one will want to use them and could have other implications. So it is quite controversial, because there's only so much, obviously, a client can do to ensure compliance by third parties. So moving on to potential implications for end user clients. So we've obviously got the greater risk, the extra burden on end user clients to make the IR35 determinations, deciding where individuals are working through a PSC. Are they working in an employee type way? Will they be safety first? But then you can see that when you're doing that, you might be having issues from the commercial perspective, because you might not be getting the contractors you need who feel that they can go to another end user client and have a determination that's outside IR35. So that would need to be weighed up. There's obviously the increased administrative burden, dealing with the systems and processes, so identifying who is affected, doing the determinations, who's going to do it, making sure they're done in time. Where IR35 applies, as I mentioned, you've got the increased cost, the increased employer's NI. The individual might have a less beneficial tax position as well. So who is going to bear those costs, which might just be a matter of commerciality. But will contractors try to increase their rates? And as I mentioned as well, will there be aggressive tax avoidance schemes to try to get around IR35? And I think at that point we've got our last polling question, Jenny.
Thanks, Patrick. Yes, we do. So for our final poll, we would like you to tell us what your biggest concern is as a result of these changes. So is it high costs, where you currently engage through a PSC, a change in status, therefore leaving you directly employing more workers, a lack of internal expertise to assess the applicability of IR35, or increased rates from self-employed workers to compensate, or finally, is it all of the above? Just give a couple of moments to allow others to contribute. That's great. Thank you very much. All right. So, interestingly, overwhelmingly, in fact, 62% are so the biggest concern is all of the above. Quite far behind in second with 13% is the lack of internal expertise. Then the change of status, meaning that they'll employ more workers directly. Then higher costs through the where you currently engage with PSCs. And then finally, with just 7% is an increased rates from self-employed workers to compensate. Patrick, is that what you'd expect?
Yeah, I think so. I think those are obviously all very common concerns, so it doesn't surprise me that all of the above is the main answer. In terms of, so those are implications for end user clients. Although we probably haven't got many employment businesses on the webinar, just very quickly to understand the issues that agencies are finding, that they're obviously generally more used to the changes in the public sector already. They are very much feel their issues with blanket assessments. So we see a lot of agencies wanting to consider actually ignoring end user assessments that are inside IR35 and deciding they should actually be outside IR35 to keep their contractors happy, and understanding what their risk is for that. And then also looking at alternatives. As I say, some the more aggressive ones, which we wouldn't recommend, but there are also other alternatives. There's one known as a statement of works, which is where you're trying to badge something as more a provision of services rather than a provision of labour. So, for example, delivering a new IT system rather than providing an individual to cover maternity leave in an IT department. And where you can make something more services than labour, you can potentially fall outside of IR35, but that isn't a magic bullet. It needs some independent advice to see if it works. So to end, what should you be doing now? Well, first, an obvious point is keep a close eye on developments. So attend webinars like this. As I said, the consultation closes on 28th of May. There'll probably be a month or two, but then we should have a release from the revenue about exactly how the rules will come in, and hopefully some draft legislation. Although it seems like a long lead-in time, I would get on with reviewing your arrangements. So how many PSCs do you engage with, or how many individuals do you have that work through PSCs? Is it practical for you to carry out a case-by-case assessment for these? Are we talking 5 or 10, or are we talking 50? Do you have appropriate contracts? Do you have any contracts? We sometimes find there are no contracts at all where you're engaging with the PSC, and in that case they could just be treated as employees of yours for tax purposes, even without IR35. So make sure your contracts are in place and are robust and correct. Consider having a look at your current arrangements in the CES tool. As I say, you can do it anonymously, so just put through a few examples just to get an idea of whether or how much of an issue IR35 is likely to cause you. And then if you think it will cause you an issue, have a think about if there's anything that could change between now and April so that it's less of an issue, and what processes you'll need to ensure you're doing the determinations in time. And for example, if individuals are inside IR35, whether you'll have the payroll system in place to pay them through payroll, because it's a slightly different system to the usual payroll. So just thinking about the processes and who will do the assessments and how that will work in your business. And then I'll now hand over to Jenny.
Thanks, Patrick. Yeah, all really interesting stuff there. I'm aware we've just slightly over our allotted time, but we have had some questions coming in, so I would like to try and get through as many of those as we can. So I think that there's a theme coming through around the different employment statuses. So I'll try and do a kind of catch-all question to covering off those. So does this legislation apply in the following circumstances? So where you've got self-employed individuals, when you're employing contractors through another business, agency contractors and temporary workers. If that's a question that is able to answer in that format, Patrick.
Yeah, so just to set out in basic terms the different scenarios. So where you directly contract with the individual, we're not talking IR35. That's just a question of are they an employee or not under the general test. If you are engaging with a business who is providing a worker to you, it actually comes down to the question I mentioned in the context of what are called statement of works. If you are being provided with services, so for example, if Squire Patton Boggs was providing you with some legal services, you might know that I was going to be providing those services for you, but that isn't IR35 because it's not what we call personal services. It's not a provision of labour. We're providing you with some legal advice. Whereas if you are being provided with an individual to do a particular job, and it's actually the labour that you're getting rather than the services, then IR35 is in point, and it can apply to temporary workers or otherwise. It can apply to contractors. Now, that can be a difficult distinction. So, for example, if it's kind of your cleaners who are being provided through a cleaning business, we're not talking about IR35 here. But it's more where you've got an individual who might be a specialist individual, or for example, IT is a common sector where they often work as contractors, where actually they're not providing a service, they're just providing themselves as individuals. And if you're contracting for them through a business, whether it's an agency or directly through their PSC, then IR35 is in point.
Thanks, Patrick. So I guess a slight extension to that would be what would be in this scenario. So if you've got you're working with a contractor who then subcontracts part or all of that work to another third party.
So if that means that the work is subcontracted to you, the end user client, then it would still come back to the answer I just gave, but it depends whether the individual that is being subcontracted you, whether that's a supply of the labour of that individual, and if so, IR35 could apply. I'm not quite sure if that's the way the question was meant. In terms of it can apply to subcontracting, so it can apply to where an individual contracts with their PSC who contracts with a contractor to provide the services of the individual, and then that contractor subcontracts those services on until you get to the end user client, and the end user client in those circumstances would have to do the IR35 determination because they are being provided with personal services of an individual who ultimately, at the end of the chain, works through a PSC.
I guess the tricky point, Patrick, is, first of all, how would the Make UK member know? Because they might not always know where you've got that chain. And also that means the Make UK member potentially has the liability if the tax isn't paid, and also needs someone internally with the necessary sort of skills to make the assessment. Have I sort of got that right?
Yeah, that is right. So in terms of the knowledge, I suppose to understand whether IR35 applies, you just need to look at what are you being provided. Are you being provided the services of labour from a business? And as I say, the case we're really looking at is where it's a single individual. Once you start looking at multiple individuals like cleaners or whoever it is providing you a service, we're not really falling with an IR35. It's where you've got one particular expert who's being provided to you. And then if IR35 applies, you have to make your determination. Yes, you might not have all of the information, and the revenue's view on that is then you'll need to try and find it out. So when you're contracting with the business you're contracting with, you'd need to make it clear to them that you need what information you need as part of that contractual process, because the idea is you have to make the determination actually before the services start being performed. So it needs to be something that's done at the outset. And yes, you as end user client can potentially be liable. You're definitely liable for getting the determination right. At that point, you'd hope that you then have no liability because you've made your determination, you've passed it on to the business you contracted with. If that's not the PSC, then it's up to that business to then pass it on until the person who's paying the PSC deducts the PAYE-NI. But then, as discussed under the latest consultation, the revenue are suggesting that you could still be liable for unpaid tax if there's non-payment further down the chain. So there is still that element of risk, and the revenue are saying, well, it's up to end user clients to know who is in the chain, so to understand who's in it right up until the individual all the way through, because their view is it's been too easy for people up the chain just to close their eyes to what they see as tax avoidance arrangements or agencies which might be offshore and never intend to pay the tax or something like that. And they just feel, obviously being the revenue, they focus on the extreme cases. And the problem is that makes it very unfair and difficult for all those who are just trying to play by the rules, but just genuinely don't know who is in their chain. But the revenue's view is they want everyone to be trying to find out who's in their chain. And then on the expertise point, it is very difficult. The revenue just say, well, we've got guidance and we're trying to improve our guidance and we've got the CES tool. But as I said, that online tool to an extent is dependent on having a bit of experience, so and expertise. So I suppose it's thinking about whether you take some external advice. Some are actually getting external advisors to do all of their assessments. That's obviously very costly, but at the least you might get some training, or you might get external advice just to do some initial assessments so you understand the rules better and the parameters, and then can do it for yourselves, and then just get the external advice going forward just for the more difficult borderline ones.
Great. Thanks, Patrick. We are quite a bit over time now, so I think we will put an end to the question and answers there. Any other questions that have came in, we'll make sure we come back to you directly with responses to those questions. So thank you to Patrick and to Tim. Brings today's session to a close. We hope that's been valuable for you. Just a couple of points to make you aware of. We've got some events coming up here at Make UK that you might be interested in. Our Managing Ill Health, Tackling Absence and Promoting Wellbeing seminars are running throughout June. You can find out more on our website at makeuk.org/training. For those of you who are importing and exporting, there's just 10 days left to access HMRC funding for training in completing customs declaration documentation. Here at Make UK, we've got both e-learning and classroom courses. Again, you can find out more at makeuk.org/training. Our Manufacturing Awards programme is now open for entries. Entry is free and open to all UK-based manufacturers and their supply chains. We've got categories covering many areas of your business, from business growth, talent, health and safety, innovation, leadership and sustainability. Alongside it, we do have a full suite of apprenticeship awards. The deadline for entries is the 1st of July, and you can find out more at makeuk.org/awards. Thanks again to Squire Patton Boggs and to Patrick. There are many ways for you to keep up to date with information and insight from Patrick and the team. You can keep up with them, follow them on Twitter, LinkedIn, Facebook, and by visiting the website and blogs that you see on your screen. Once again, thank you very much for joining us today. The recording of the webinar will be circulated in the next day or so. If you have any questions, please do feel free to contact Patrick or Tim directly. As you close the webinar, there is a very brief survey. It'd be great if you could complete that to get an idea of how we can help you with the changes to IR 35. So thanks again, and we hope to see you again soon.